everyone. It's really great to be here and to see all of you for this afternoon's webinar. I'm here with my colleague, Julian. Julian, want to say hello for a second as well? Julian is a director of marketing at the Financial Modeling Institute.
Hi, everyone. Nice to meet you. Thanks for joining us today.
Exactly. Thank you guys for coming. We're excited to have a large group of you here. And Julian, you can see my screen okay?
Yep, can see it great.
Okay, excellent. I want to start by thanking the CFA Society of New Zealand for having us here this afternoon to run this webinar, and Kylie for helping to coordinate, and for Tawanda. I saw you there. Tawanda is an approved training provider in New Zealand that provides training in financial modeling, and I'll talk more about him and some of his training in just a moment. But let's back up a second. It's really great to hear you all. Before I even start, before I get into some introductions, let me just make sure everyone can hear me okay. Can you guys, now, by the way, if you see me looking over this way, I'm looking at you. I mean, not actually you, but I'm seeing a list of all your names right now, and there's a nice big number of you here. I want to make sure everyone can hear okay and you're settled in. So can you just raise your hands if you can hear me? I'm just looking for, excellent. I can see a hand. Thank you, Lisa. And nice, a whole bunch of you. Fantastic. It's amazing. Wow. A lot of hands went up. Fantastic. I'm going to try to, so keep close to your hand. I'm going to try to ask you a bunch of questions and interact with you as best I can for the next hour and a half. We've got 90 minutes together, and I'm excited to work with you guys for the next 90 minutes. This is around the 20th or 25th time that we have led this webinar for a CFA society. We've been leading this webinar for CFA societies all over the world, and it's been really nicely received with lots and lots of people. So we're excited to do it for you guys as well. Now, the webinar is being recorded, and so if you need to drop off a little bit early, the CFA Society is going to post it, and a recording of it will be available after. Let me walk you through a little bit about who I am and my background, and then I'm going to share with you our agenda and timing so you know exactly what we're going to be doing here. And then I'm going to quickly jump in to the content. So you can see my slides. By the way, everything that I show you this afternoon, we're going to be sharing with you. So I'm going to be showing you some slides. I have an Excel model I'm going to be sharing with you, and I will take some notes as well in a spreadsheet. All of those files we will share with you after the fact, so you'll have access to them as a resource. So let me kind of jump in here very quickly and bounce around a little bit. I'll go to this page that talks about, shows you who I am. So this is me. My name is Schnoor. I am the executive director of the Financial Modeling Institute. I'm just going to give you a quick 2-minute background on the FMI, which is what we call ourselves, just so you understand who we are and why we are here. So before the Financial Modeling Institute, I started my career as an investment banker. I worked at a couple banks early in my career. I worked at BMO, and then I worked at Citibank for a few years doing traditional investment banking. And around 20 years ago, I left banking and I started this business called the Marquee Group. By the way, I didn't even tell you where I am. I keep saying good afternoon to you, but it's a bit strange because it's currently about 7:30 in the evening, my time. Julian and I are based in Toronto. I still find it a big thrill to lead webinars on the other side of the world, which is really fun to be so close and so far away at the same time. But this is a business, the Marquee Group, that I started in Canada 20 years ago. And through the Marquee Group, we run training courses all over the world in financial modeling, valuation. We teach courses in advanced Excel, and we have a lot of new courses in data science and Python. So we're a training platform. And one of the things that we discovered a number of years ago was that there was no way for our students to prove that they had good financial modeling skills. They were being asked by recruiters if they had modeling skills, and they would say on their CV or their resume that they attended a course by the Marquee Group or some other training vendor. But just because you took a course doesn't mean that you have tremendous skills. Modeling is a skill, just like any other skill. You need to practice to get really good at it. And so we discovered and realized that there was no way for people to prove their skills. So we went out, we actually worked with an Australian company, and we created this organization called the Financial Modeling Institute. And our sole purpose, the Financial Modeling Institute is a separate organization. And our goal at the Financial Modeling Institute is to provide 3 levels of testing, challenging, very rigorous, challenging testing in the field of financial modeling. Think of the Financial Modeling Institute somewhat like the CFA Institute. The mandate is to provide rigorous, independent testing. The tests are done in person, and they are 4 hours long, where you're actually building up models, and they're graded manually. It's rigorous and challenging. And for people who pass the first level is called the AFM, the Advanced Financial Modeler level. And it demonstrates that people have very strong modeling skills. Now, I just said that the exams were done in person. And for a number of years, we were doing the tests in person. We had a testing center in New Zealand, along with dozens of other places in the world. But due to COVID, we moved all of our exams to be virtual online. And that's what we're currently doing this year. It's working out really well. So we're going to continue with the virtual exams. So people are now writing the exams from home, but still proctored. Someone is watching and watching your screen. So very controlled, very proctored, but it's people enjoy being able to do it from home. And that is the whole purpose of the FMI. I'm not going to talk any more about the FMI, but what I will share with you is that there's a bunch of slides. You can see these on your own at the very back. An overview of the FMI. It talks a little about our mission and values. It talks about how the certification works, how we're different than other firms that claim they do testing. And it talks a little bit about what's going on. The key thing is the FMI does not provide training. We don't provide any paid training, but we have training firms all over the world that can provide training if you happen to be interested. And we're pleased to welcome one of your own, Tawanda Makoni from in New Zealand, as one of our newest approved training providers. And maybe we'll get him to say hello if you're still around a little bit towards the end of the webinar. So we are passionate about financial modeling and making sure people have excellent skills. The CFA Institute has been very supportive. In fact, the Institute told us that the #1 request of CFA candidates and charter holders around the world is that they have been asking the CFA Institute to add financial modeling into the CFA curriculum. But the CFA has no capability or no interest in doing that. So they were very interested to know that we are around, and they encouraged us to build relationships with CFA societies around the world. And what we decided to do was put together a free learning series. So today is topic #1 on financial modeling best practices. I'm going to share with you my favorite top 10 tips to build a world-class financial model. And as I said, this is the 20th or 25th time that we've run this webinar. We've also started running our second one in the series around the world on skills to check and review a financial model, what to do when something goes wrong. It's been a really fun way to engage and share people some tips that we've picked up over the years. Okay, so that's a little bit about who I am, what the FMI is all about. If you have any questions, please don't be shy. You're welcome to reach out. You're welcome to connect with me on LinkedIn, and always happy to take any questions. Okay, so I'm going to jump in now. Just so you know, it is I guess 12:40 your time. I'm going to go about an hour and 10 minutes, and then leave some time for questions. If you have questions, you are welcome to add them into the, please add your questions into the Q&A section. I see that Julian has mentioned that here. And then Julian and I will go back and forth and take some questions. And by the way, if there's lots of questions, we're happy to stick around for a little bit late. We'll stay late if you still have questions. We can stay past 2 if anyone happens to be interested. Okay, so that's what I wanted to kind of get through here. Let's now get into the whole purpose that we're here, which is to talk about the content. And that is about financial modeling and the fact that our view is financial modeling is a discipline. I'm going to actually ask you for a quick show of hands. How many of you have built a handful of financial models from scratch? How many of you have actually built a number of financial models? Great. I expect to see a bunch of hands go up. Some hands are going up. Okay, super. Some of you have built a bunch of models. A bunch of you have probably not built a bunch of models. I have personally taught a couple thousand days of modeling training over the past 20 years. And I always find that there's a wide range of skills. So some of you are probably pretty good and others are probably just newer in the field of modeling. I'm going to try and make sure all of you leave with some new tips and ideas. But I got to tell you, I mean, personally, I've probably built over 100 models myself over the years, and there's always new things to learn. And I want to share with you some of my thoughts about the discipline. I always like to ask, if I'm running a course, I always like to ask a group, what is a financial model? It sounds like a silly question, but I'm going to put a couple of notes here on the board. And if I asked you what is a financial model, I always like to hear in a classroom people's views and answers about what that means, because we get a wide range of different answers from people. Second here, always get a wide range of answers from people when you ask the question, what is a financial model? But very simply, all it is a forecast. Now, most of you probably know that it's just a forecast. All we're trying to do is take a company's financial statements. We're looking at their historical financials, and all we're trying to do is very simply forecast their income statement, cash flow statement, balance sheet into the future. That's it. That's all we're trying to do. So which begs the question, why, right? Why do we forecast? Well, there's actually lots of reasons. You know, usually when I ask this question in a classroom, people put their hand up and they say, well, we build models so we can do valuation work. Yes, that's true, but that's only one reason. There's a lot of reasons why we build forecasts. We build forecasts to value companies, but we build models just to do budgeting or planning, right? We build models to do credit analysis or LBO analysis, to look at a lot of debt structured into a company. We build models to understand risk or volatility of a business and how volatile it will respond to certain economic events. We build models to understand mergers and acquisitions, the impact of one company buying another one. So there's lots and lots of reasons we build models. And it sounds pretty simple. All we're trying to do is build a forecast into the future. Usually 5 to 10 years is common in terms of how far out we go, but it's just so that we can build a forecast. And why, again, are we doing this? Well, at the end of the day, we're trying to make a decision, right? Models, I will tell you, have become the most important decision-making tool in finance. In all of finance, the most important decision-making tools that we use are our financial models. Guys, this has become so important that now we find a lot of recruiters and companies are looking for this skill before they even hire people. You know, when I became a banker many years ago, they just were looking for people that, you know, that they liked out of university. You didn't have to have modeling skills, but now they put it right on job postings. In fact, I'm going to look over at you guys now. Has anybody here, help me out, raise your hands. Has anybody here ever seen a job posting that said, whatever, we're looking for a CFA or an accountant, but we're also looking for strong modeling skills? Has anyone ever seen a job posting that specifically, I'm looking over at you, that specifically want a candidate with strong modeling skills? Yes, of course. Many of you have. A lot of hands went up here. It's pretty common. Recruiters now want this skill even before they hire people. In fact, does anyone here, another show of hands, does anyone here work at the Big Four professional service firms, either PwC or Deloitte or KPMG, right? Some of your hands are going up, right? Excellent. So just so you know, PwC has been a very big, very big promoter of the Financial Modeling Institute and of the exams, and use it to examine a lot of their recruits and their existing hires to ensure that they have sufficient and appropriate modeling skills. This has become sort of table stakes. And here's the problem. It sounds really simple, right? All we're trying to do is build a forecast so that we can make a decision. But there's a problem, and that's why we're here. The big problem is this, is that most financial models that I've ever encountered, that many of my colleagues have encountered, most financial models are a mess. Most financial models are a disaster, and they make it very difficult to use, and they make it very difficult to make an effective decision. So what I want to share with you today is my top 10 favorite skills to help you build clean, organized, simple models that work really effectively. Guys, I promise you, even if you have built 10 or 20 models, many people who've built lots of models can still benefit from making them cleaner, more organized, and better to use. And so if we go back to this page, I'm showing you a model is a very multidisciplinary skill. Part of the reason I love modeling, and many people do, is because modeling requires lots of different skill sets. We need to, of course, understand Excel really well. That's a tool we use. I'm going to share with you a couple great tips that some people have not seen before when I've run this webinar. So we need to be good at Excel. We have to have good skills in design. I'm going to tell you right now, the number one reason why financial models fail is because of poor design. And if you understand how to design and structure a model, it will greatly enhance the chances of it working well. We need to have good accounting skills. Now, you don't need to be an accountant, but it's important to understand how all the numbers talk to each other in a set of financial statements. And we, of course, need to understand finance so we can make financial decisions. And our job is to pull it all together. And the last thing I want to share with you is this, is a good model, before we jump into the 10 tips, a good model needs to work in two ways, okay? How do you know if a financial model is working well? Guys, this is the big test. Go back to your desk when the webinar is over, open up a model, and see if it works both of these ways. If it does, it's probably working pretty well. But if it doesn't, it can be improved. What do I mean? A good model needs to work well electronically. What I mean by that is every formula must make sense. Okay, every single formula has to make sense and be logical and be obvious. And so often that doesn't happen. Guys, can you help me out? Can anyone raise your hands if you've seen this? Has anyone ever clicked on a cell in a spreadsheet and you looked in the formula bar and the formula was so long that it wrapped around and around and around? Has anyone, I'll look over, has anyone ever seen formulas in spreadsheets that were so long that they just wrapped around and around? Yeah, I'm sure. I'm looking over. A lot of hands are going up, right? Of course you have. We've all seen that before. That's not optimal. It can't work that way. We need to make sure that every formula is clear and logical. The ideas can be complex, but we have to build them in a very manageable way. So a good model needs to work well that way. And number two, a good model must work, this is going to sound funny, on paper or as a PDF. You need to be able to take your completed model, PDF it, save it, and feel like it's a presentation, whether it's 10 pages or 20 or 30 or even 50 pages or more. It has to work well like a presentation as a paper-based tool. Why? Because even in today's day and age, most decision makers still want to make a decision by reviewing something on paper or as a PDF. It's very rare to make a critical decision by opening up a spreadsheet and getting a bunch of people to play with a spreadsheet in Excel in order to decide what to do. We need to make sure it works. So what I'm really saying is that a model needs to be a powerful communication tool. Okay, a model needs to be a powerful communication tool. It needs to tell a story. And what I'm going to tell you today is if your models don't tell a story well enough, they can be improved. Some of the quote best modelers I've ever met, meeting some people that are incredibly proficient technically, have excellent technical skills, but their models don't communicate. They don't tell a story, in which case they're not as effective as they can be. So let's jump in now and talk about a couple ideas. Page 11, I'm going to do quickly. It just says we need to make sure our models can communicate clearly. They need to be dynamic, flexible, intuitive, right? Transparent, transferable. When they achieve these criteria, they will create tremendous credibility and inspire confidence. And that's what we're trying to do, so people feel good about the decisions that they're making. Now, how do we do this? Well, one of the keys is we need to keep it simple. We need to keep our design simple, our logic simple. We can use complex ideas, but we've got to keep the approach and the layout simple so people can understand it and truly be confident with what they're seeing. Couple simple basics, as I said, keep it simple, simple formulas, simple logic so that it's readable. We also have to avoid this. We need to make sure one of the first things we want to make sure we avoid is this idea of hard coding, right? We never want to see a formula that looks like this. Guys, can anyone raise your hands? Has anyone ever seen a formula like this in a spreadsheet? I'll look over at you. Has anyone ever clicked on a cell and seen something like that before? A5 multiplied by 0.025 plus 4.9. Have you seen that before? Sure, a lot of hands going up. You know, if I'm teaching a class in person, sometimes I'll ask my class, I'll say to someone, hey, what does the 4.9 mean? And can I tell you, a few months ago, I asked my class what 4.9 means. Someone raised their hand and he tried to explain it to me. I said, you have no idea what that means. I just typed it in there. I don't even know what it means. The point is, that's a hard-coded value. Actually, I do know what that means. It means that it was late at night and the model builder was feeling tired and lazy, and their boss said, there's going to be a $4.9 million adjustment. And they just went right into a formula and they typed it in. We can't do that. We can't ever do that. So we need to make sure that we build clean, logical, transparent formulas. And I'm now going to get into my favorite tips to make sure we get there. By the way, we also believe that if you're going to be a strong modeler, you need to keep your hands on the keyboard. One of the big challenges about getting through the exam is working fast, quickly. And to do that, you really need to keep your hands on the keyboard. One of the tools we're going to share with you at the end of the webinar is this. You're all going to get sent our favorite Excel keyboard shortcuts. We'll send it to you for a PC and a Mac, and you're welcome to use this to help yourself work more quickly in Excel. So on that note, then, let's jump in, and I'm going to spend, so it's about 5 minutes to the hour. I'm going to spend about the next 50 minutes or so going through my favorite top 10 tips. And then we're also going to take a look at a model, and then we'll leave some time for questions here at the end. Okay, that makes sense. So here we go. I also have these top 10 tips within the Excel file where I keep my notes so I don't have to jump back and forth. So here's the first thing. One of the things that I would say, and it's amazing, so often when I look at people's financial models, it's pretty obvious when I look at their models that they didn't have a plan. And I'm going to tell you that I'll put a note here on the board. It is critical to properly plan and design a model. It's so critical to properly plan and design a model before you start to build it. If you don't, it will very, very quickly become a challenging mess. There is so many reasons I want to plan a model. We often call this, you can call it a scoping document. When we build models in our other business for firms, we'll call it a scoping tool where we map out exactly what the model is going to look like, what kind of data, and what it allows me to do is it allows me to ask lots of questions. I love the process of beginning a model, because I get to be the person that comes in and asks lots of questions, and they might sound like dumb questions, silly questions, but they're not. They're helping us understand the purpose of the model. Don't ever assume that you can take that for granted. As an example, when we ever start, I want to know what's the purpose of this model. And I can promise you this, if you get asked to build a financial model, a forecast, and you ask a few different people, hey, if you ask a few different people, your boss and your client and a few people what the purpose is, you're going to get a few different answers. People will have different ideas on what the purpose is of the model. Make sure we're clear. What assumptions should we use? How much detail do I need? How far in the future do we need? Has anybody here ever built a monthly model? Has anyone here ever built a monthly? I'm going to raise watch over here. Has anyone ever done a model that's monthly? It's a little bit more of a pain, isn't it? It has a lot more columns. Can I tell you, so often when we have a client and they ask us to build a model that's monthly, you know what our first question is? And say, why? why do you need a monthly model? And often they'll say, oh, I don't know, we're just used to having monthly. Now, if they truly need a monthly model, we'll build them a monthly model for the next year or two. But my point is, very often people simply do things because that's the way they've always done it, or that's the way the previous person did it. Doesn't always make sense. So we like to ask lots of questions. And I will tell you, in your planning process, I would encourage you to build up a plan in 3 critical steps. And so there are 3 steps to a strong plan. If this is the only thing you take away from this webinar, I think you'll already be ahead. And by the way, my promise for you in this particular webinar is if you come away and understand and really think about the 10 best practices, and you start to implement many or most of these best practices in your own models, in your own forecasts, I promise you that people are going to appreciate your models, enjoy them, and feel like your models are working more effectively than maybe they did previously. And so I'm talking about the first 2 takeaways here, which is to plan and design it and ask lots of questions. Don't be embarrassed. Ask whatever questions you think you need to ask, and you're going to get a lot of interesting answers. The first step in the planning process is to think about the major issues, or what we like to call in corporate finance is the key drivers, okay? I would encourage you that when you're building a financial model, the very first thing to think about is what are the key drivers? Now, I will tell you, these are the most critical assumptions that will impact results. What are the most critical assumptions that will impact the results? These are often hard to forecast and they're hard to control, but they can have a huge impact on the success or the failure of the business. Hard to forecast, hard to control. These are often economic variables, i.e. things like exchange rates or inflation rates or interest rates, variables that can be, or commodity prices, right? If I'm going to forecast and build a model for an oil and gas company, I obviously want to forecast the price of oil, and I can't forecast it perfectly for the next 5, 10, 15 years. So my point is there are always going to be some variables that are hard to forecast, hard to control. My job just for now is to think about them, figure out which ones they are. And we're going to come back to them later. I'm going to show you how to deal with them, how to treat them a little bit later, but these are going to be some critical variables that we need to forecast here. So key drivers, major issues is the first thing that we want to think about here. And again, these are the variables that are often economic, and we'll look at how to, I'll show you how to build a really powerful section for them in the model in just a few minutes. The second thing I would encourage you to do is to make a big list of all the assumptions. Make a giant list of every assumption you need, okay? Every single thing that you need to build in the model, including how are we going to generate revenue? What types of costs does the company have? What, right? Things like labor costs, things like energy costs. What are the company's costs? How does it work? Maybe they have materials costs. Maybe they have supplies. I don't know. Marketing costs. How does it work? I need to understand the business, and I'm going to ask questions until I do. I want to understand things like their working capital. How much do they have invested in receivables, inventory, payables? How does their income tax work? How does their debt work and their equity work? I need to understand all of the elements of how this company works so that I can make critical assumptions about the future. And I would encourage you to make a big list of every single variable you need. And by the way, it's not the modeler's job to make up the assumption variables. This is key. Often modelers feel like it's their job to figure out what the value should be. Not at all. Your job is to figure out what we need in terms of the data, and then to go ask questions. The modeler's job is not to make up the assumptions, rather to identify the need, and then ask questions. Ask your boss, ask your client, figure out where you're going to get the information. The final thing I would suggest is that when you're making your plan is to plan out the model on paper, i.e. pretend it's going to be a presentation. I've got a question here, guys. How many of you have built a PowerPoint presentation of slides in the last year? You can raise your hands. How many of you have built a PowerPoint deck or PowerPoint slides in the last year? Some PowerPoint? Sure. Looking over here, lots of hands going up. Many of you have built PowerPoint presentations. Sure. Of course, many of us do. Okay, lots of hands went up. I bet you I know exactly what the first thing is you did. If you ever had to build a PowerPoint presentation, what's the first thing you do? I know what the answer is because everybody does this in the world. The very first thing you do when you build a new PowerPoint deck is you plan out the table of contents, or you storyboard it. You try to figure out what's going to go on every page. You map out the deck, right? So we create, where we're going to say is create the table, TOC, table of contents, right? Create a storyboard. Figure out what you want to say on every page. That's what we do in a PowerPoint. Well, what I would say is do the same thing for a model. I want to know what's going to be on every page so that I can then go build it. So again, I know it sounds simple. It has nothing to do with Excel, but I promise you, so many models that we encounter did not have a lot of good planning going into them. And then there's always issues. There's inconsistencies, and the modeler doesn't really understand the business as well as they should. So we're going to get to the next couple of assumptions, the next couple of takeaways here has to do with the assumptions. But before I do that, I want to quickly talk about optimal model flow. Okay. I want to talk about optimal model flow because we're going to get to the assumptions in just a moment. Now, you'll remember I told you that it's ideal for a model to work well as a paper tool, not just as a giant calculator. We need to make sure it works on paper. I'm going to show you right now a financial model in a PDF format. Okay. I'm going to show it to you in Excel, but also as a PDF. So take a look. This here is a model. It's called the Henderson manufacturing model. This model actually lives on the FMI website. It's a sample model. It's a 15-page model, so it's about medium size. It's not too short, not too long. It's a sample model. By the way, in the first level of the FMI exams, the AFM level, level 1, people need to build a model very much like this one from scratch. So you know you're ready to sit the exam if you can build a model like this in Excel in under 4 hours. We give you a case study and you need to build up a model like this from scratch. So what do we got here? Well, I'm going to deliberately flip the pages very, very quickly. Okay, right now, take a look. I'm going to actually zoom in just so it's a little bit larger. Okay, so you see what I've got here? I've got a cover page. You know, there's 15 pages. I've got a cover page. When I turn the page, there's an executive summary. It says here summary outputs. I'm going to go quickly. I'm going to go the same speed that your boss would go. And then I'm going to come back after. Take a look. Page 3 has got some inputs and assumptions for the business. Then page 4 is additional inputs and assumptions, right? Don't worry about the numbers. Let's just focus on big picture. Look at it like a presentation. I've got a page of scenarios. Okay. I've got some scenario variables where there's a base, best, and a worst case. I'm going to talk about that shortly. I have a revenue schedule, which is the next page, page 6. We're forecasting the company's revenue. Now watch as I go down. There is a page that has operating costs. Next, I'm going to get into the financial statements. Take a look. I've got the income statement. And then next is going to be the cash flow statement. And then the balance sheet. And then some additional calculations, which are the last few pages. My point, though, is this, guys. Look, as I flip up and down very quickly, what I want you to pay attention to, and a lot of people notice this, is it should feel like a bit of a presentation. Look, every page has the company name at the very top. There's a header with a name and a subtitle. There's a footer. I've got page numbers and the date and time that it was printed. You'll notice every number is the same size on every page. It takes up the same amount of space. What this does, and it's legible. We've used lines and bolding. It makes your client or your boss feel like they're looking at a financial presentation. And again, this creates a lot of confidence. So often people say to me, Ian, how do I print my model? It always prints onto 100 sheets and they're blank or the numbers are tiny. Well, this is what we're striving for, is to make sure that it works and feels like this, so someone can flip it, use it, or read it on paper. Now let's talk about the optimal order, because I want to quickly get into the assumption in just a second. The first thing you noticed was that there was a cover page in the model, and I will tell you that most models do not have this, it's a really simple page. It takes only 5 minutes to build this page. Why is it so nice to include a cover page? Because it creates confidence, and it tells the reader that this is a financial presentation, right? It feels like a financial presentation. So I would strongly encourage you to include a cover page. It does not take very long, and include things on your cover page, include things like company logo, company name, your name, if you want to put that on the cover. You could put the date and time, whatever you want to include is fine, to make sure that people understand what they're looking at, the version, whatever you think is important is going to be helpful to include on the cover. Now, by the way, if we're talking about dates in Excel, many of you probably know this, you can have a static date in a spreadsheet. So if I wanted to enter today's date, do you see this? Today is, well, for me, it's the 15th. For you, it's the 16th. So let's put in the 16th of March, 2021. That's a static date. It's dead. What I will share with you, though, is you might not have seen that the keyboard shortcut to enter a static date is Control and the semicolon, right? Take a look at this. If I go to a blank cell and I press Control semicolon, it enters today's date in the cell, and it will always stay that way. It's never going to go anywhere. If, however, you want to put in a dynamic date, you can either use, most of you know, you can use Excel's today function is the first way to do this. You can use Excel's today's function, or what some people have not seen is another function called the now function. These functions both return the date, but the now function also includes the time, okay? And it will update always automatically, right? If I was to say equals today and press open bracket, close bracket, it again shows the today's date. Well, for me, it's today's date, but it will change automatically when my clock hits midnight. Okay, so that is what's going on, and it's one simple thing to include to start off in your models. Now, the second thing that I would strongly encourage you to include is an executive summary. And I would also tell you, so many models that I've ever seen do not have it. You'll notice again that when I showed you the model here, the second page is an executive summary. It says summary outputs. And I've done it under 3 cases. We've got a base case, a best case, and a worst case. Each box is exactly the same. All I have here is some revenue, EBITDA, some margins and growth rates, some net income. It doesn't really matter. It doesn't matter because what I will tell you is this page needs to be customized for your reader. You need to include whatever your reader wants to see. I would say include things like whatever, NPVs, IRRs, or maybe you just need revenue, EBITDA, cash flow, I don't know. But whatever you need to help your team make a decision is what you should include on the executive summary. But why do we need this? And this is the important question. Why do we want to have an executive summary? Because I promise you, this has happened to me every single time. The first thing a reader always wants to know, the reader of the model, your boss, is, you know the answer. What's the first thing someone wants to know when they look at a model? They want to know what's the answer. What's the answer? And so the first thing that they want to know is, what is the answer? Show them the executive summary. And I will tell you, this is going to always be the first thing to see, but the last piece to build. You can't build it until the very end, but it's the first thing people want to see. So I would strongly encourage you to do that next. Now, that gets me to the next major tip, which is this. And this is sometimes a bit of a contentious one here, guys. You'll notice that in the tips, course takeaways for today's course, I've told you that it's ideal, if you want to build a world-class model, I've told you it's optimal to keep the assumptions up front. And then we'll talk about number 4 is to include and make them blue. But we want to keep all of the data, the assumptions up front for the model. And so often, people don't do this. I'm going to say many models do not have this. They do not have all the assumptions up front. Let's go take a look now. Let's go take a look at the actual model. Okay. I'm now in Excel. I've got the cover sheet. I've got the executive summary that I showed you a moment ago. And then I have a tab called assumptions. All of the assumptions live here. So I've got, this was one page of assumptions, and underneath it was a second page of assumptions. So often people don't do this. Now, this is all of the assumptions. Guys, I've got a question for you. Has anybody ever worked on a model or seen a model where the assumptions were scattered everywhere? Have you ever worked with a spreadsheet model where, I'm looking over at you guys here, have you ever seen a spreadsheet model where everywhere you went, there were some input cells and some calculation cells all over the place, some data inputs and some formulas? Okay, a bunch of hands going up. Sure, you've seen that. Yeah, looking over. Because we've all seen that. I've seen that numerous times. What's the problem with that, guys? So imagine this. Imagine that I did not have any assumption page. This was gone. Imagine this sheet was just not here. Well, what would the user have done? Well, on the model sheet, all of the assumptions would have been here. So wherever they needed a data input, they would have typed in the assumption here, all over the place. What's the problem with that? Well, there's two problems with having data inputs all over the place on the assumption sheet, on the model sheet. The problem with having assumptions right here on the model sheet is, number one, it's hard to know where to go to change them. It's tough to know where to go to change them. But here's the second reason. Here's the key reason why we want to have the assumptions up front. Why do I want the assumptions up front? I'll say it's important to have up front because after you show your boss the executive summary, as soon as you show your boss the executive summary, the next thing they want to know is, how did you get there? As soon as you show your boss what's the answer, the next thing that they want to know is, how did you get there? What assumptions did you make to derive those answers? And so that's why we like to keep them up front. And by the way, a very common model discipline, as I'm sure many of you know, a very common modeling approach is a very common standard. Oops. A common standard is to have the inputs blue, right? You probably all know that, is to have the inputs blue. We like to keep inputs blue and formulas black. I'll put a note here. Inputs are often blue in a model and calculations are black. Why is that? Just so that it's obvious, so that people can look at it and they know which of these cells that are inputs. I can see here all these numbers are blue, which means they are my data inputs. I typed them in as my thinking. Now, by the way, you may have noticed on the model sheet, there are also blue numbers. That's true. My historical data is blue because these are dead. These are dead numbers, my 3 historical years. So those are also blue. They're never going to change. I typed them in. but we never want to see blue numbers in the forecast. The forecast should only have formulas, links, and calculations. Okay, fine. But what I want to share with you now is this. Believe it or not, I have had many people over the years tell me that they don't like to keep the assumptions up front, okay? I've had some people say to me, Ian, I get it. I understand that it's nice to have all the assumptions up front, but I don't do that because when I make a change to an assumption, I want to see exactly what that does to the answers. I get it. So for example, guys, watch this. Let's pretend my boss told me that the raw material in 2020 was not 226 or 2021, whatever. I should update it, right? Because the first year is now going to be 2021 of my forecast. So this is meant to be 2021 and everything moved into the next 5 years. But let's say I checked and it was not going to be 226. My boss said that the raw materials were going to be 256 next year. So I'm going to enter the first year of my forecast will be 256. Watch this. I'll press enter. Okay, so what? What happened? I don't know. What happened to the answers? I'm not actually sure. So now I'm going to have to move over to my model and take a look. What did that do to my EBITDA, to my net income? I'm not sure. And I understand that. We understand that when you enter your assumptions, a lot of people want to see what is that going to do to the answers. Well, I want to share with you now. Three great ways to have assumptions up front, but see the impact. What will be the impact on results? And there are three really great ways to do this. One is just very simple, is to build a summary box on the assumption sheet. This is actually really easy, but a lot of people love doing this. It's pretty simple. Take a look. I could do something as simple as this. Watch. I'm going to simply, I notice I have some blank space here. I could build a new box called model output swatch, and I will simply build myself a box. Maybe I want to include things like just revenues, or let's say EBITDA. Maybe I want to see EBITDA and net income. That's it. And I want to simply see what will that look like. So I can look at a couple years here into the future. Maybe I want to see 2 years, whatever. And all I need to do then is link it up. Take a look. I'll go to my model and link up 2 years of EBITDA. No big deal. So now if I was to change my inputs, I've got a few outputs that are right here. Pretty simple idea, but it can be an effective way to see your outputs as you make a change. That's fine. But what I really want to do is show you two really powerful tools in Excel that you might like, you might not have seen before. The first one is to use Excel's watch window. Okay, this is a really great feature. Can you guys show me with a show of hands, how many of you have used Excel's watch window in the past? Can you take a look? How many of you have used this tool, the watch window? Only a couple of you. Take a look. I'm going to show this to you. Watch what this does. Okay, I suspect you can all benefit from this, guys. Watch this. This is a really great feature in Excel. There is a feature here under the formulas menu. Look where I went, formulas, and there's a button that says watch window. And you might be thinking, wait a second, I never saw that button before. Well, this feature has been in Excel for a long time, but it used to be hidden. They've now added it recently right onto the menus. And so look what I can do. I can go formula watch window, and it gives me this box. And I can click add watch. Take a look what happens. I'm going to say add watch. I'm going to go to my model sheet, and I'm going to select, let's say, 3 years of EBITDA, and I'll click add. Look what happens. I now have 3 years of EBITDA in my box. I'm going to add another watch. Let's say I would also like to watch net income. I will go to the net income line on my income statement. You see what I'm doing? Carefully selecting net income, and I will click add again. So now look what's going on. I have 3 years of EBITDA and 3 years of net income. I could get whatever I want in here. I could get some debt figures, some capitalization figures. But the beauty is, take a look. If I change now the raw material cost to 256, keep your eyes on the box here. Look what happened. I can see exactly what's going on. So you can build a bunch of things in there. And by the way, even if I go to a different sheet, this box travels with me. So every time I make a change, I can see what that's doing to my critical answers. So it's a really great skill, and I really hope you use it. People find it very valuable once they know this feature exists. So I'm going to say the watch window, I'm going to close it down here. It's again under formulas and then watch window. Try it out. I think you'll find that it works really, really nicely. And finally, the last great way to change an input but see the answers is to use Excel's camera tool. This is a great tool. This is also hidden. I'm looking over. Can you guys raise your hands? Has anybody used Excel's camera tool? You're thinking, what the heck is a camera tool in Excel? I only see one hand. Yeah, believe it or not, Excel has a camera. Take a look at this, guys. It works really, really nicely. Most people have never heard of this and did not know it existed because this feature truly is hidden. Can you guys see my screen? Look what I'm hovering over. Look, I hovered over a button and it says camera. Well, you probably didn't know that was there. Well, I had to put it there. To access the camera does not live in the menus. You have to activate it. Where do you go? You go here to the file menu. I'm going to click file, and then I'm going to go options. I'm going to click file and then go file options. Look where I am. From there, I'm going to go to my quick access toolbar. Do you see this quick access toolbar? And the quick access toolbar is the little toolbar that lives at the very top of your screen. This one here, you can put some of your favorite keyboard shortcuts or favorite tips in the quick access toolbar. And what you can do is you can say, go look at all the commands in Excel. Watch this, guys. When you click all commands, you will get a list of every single feature in Excel. You probably didn't know half of these existed because they're not on the menus. Look, there's something called a 3D map. There's all sorts of different features in Excel, hundreds and hundreds and hundreds. Look at this, hundreds of features in Excel you may never have known about. And what I'm going to do is look for the one called camera. It's alphabetical. So when I find it here, there's the camera. You click add, and it goes to the right. Everything on the right side is going to live in the quick access toolbar, and you click OK. And now it shows up. Now watch this, guys. Take a look. Imagine I wanted to watch my income statement. Look what I can do. I am going to go to my income statement and very, very quickly highlight it like this. Let me select 3 years of my income statement and now take a picture of it. If I click the camera, look what I'm going to do. I'm going to click the camera and it activates it. It took a picture of this image, 3 years of income statement. I'm going to go back to my assumption sheet and I'm going to just click once right here. And look what it did. It has pasted a picture of my income statement. But this is much better than a dead picture. Watch this, guys. If I once again change my raw material cost to be 256 and press enter, look please at my image, my picture. When I do that, it changed. It's a dynamic picture. And so you're able to look in all over the place into deep parts of your model and see what's going on. I wanted you to see that because when it comes to modeling, it's so important to keep assumptions up front, because that way your user understands what's going on. And when you change an input, you want to be able to explain all the assumptions to the reader. But I know that the user also wants to change an input and see what that's doing to their results. And I hope you can use some of these. Are you guys going to try some of these? Just out of a show of hands, will some of you, if you want to raise your hands, will some of you try some of these? I hope will you use these and try them? Yeah, excellent. Great. Lots of hands going up. Fantastic. Great. Beautiful. I promise you, they're so simple. They're so easy, but people just don't know about them and how they work. And I hope that you can find these really helpful in your tasks. Okay, great. I need here's where we are. Let me give you a quick timing update. It is going to be, it's 1:25. I'm going to go about another 20, 25 minutes. The first 4 take the longest time. I'm going to very quickly go through the next 6 and then leave hopefully about 10 minutes at the end for a few questions. Okay. What I will tell you next is that when it comes to a model, the next thing you want to include is a page on scenarios. And the scenario page is the most important assumptions in the model. And I will tell you that every model should have this page. Let's take a look here, guys. Every model you ever build should have a scenario page. It's right. It's so important. We like to build it on its own sheet. All this is more assumptions. Take a look. I'm going to do this pretty quickly because I spent a few extra minutes showing you the camera and the watch window. I'm going to do this pretty fast. You can watch the video of me doing this after, and you're going to get the model. So I encourage you, please look at this page. This is so important. All this page is more assumptions. Look, I have an assumption for cost inflation, an assumption for sales price, an assumption for sales volume. That's it. But what's different about these assumptions? Well, for these assumptions, we have 3 cases. I have a base, I have a best, and I have a worst case. A base, best, and a worst case, okay? And why is that? It's because these are the key drivers. These are the most important assumptions in the model. And so I want to make sure I build them very, very effectively. And so the way we do that is very, very simply in 3 steps. Step number 1 is to build this large rectangle. Does everyone see this? There's a large rectangle that has all blue numbers. These are my assumptions. Okay, these are my assumptions, and that's why they are blue. If you're going to build a variable for cost inflation or oil prices, you need to decide what is your base case, best case, and a worst case for this particular variable. That's it. And you're going to enter the variables for oil prices, inflation, exchange rates, whatever you want. The second thing we're going to do is put a number 1 in the cell. That's it. So I've got a switch cell. I'm going to designate a certain cell as a switch and enter a number 1. Very easy, very, very simple. That's it. I have a number 1 in the cell, and that's going to control the scenario. So remember, these cells are just blue inputs, nothing fancy here. I just typed these in and I have a switch. Well, the key part of this page is the skinny row. I have a skinny row here that's black, because this is the row showing me the live case. This is the case actually running in the model. And so, of course, this should not be a data input. This one's a formula. And the function in Excel that we like to use to run this is Excel's choose function. You could use an if statement. I mean, there's lots of options. You could use in Excel an if. You could use an offset. You could use an index. But we like choose because it's so simple and clients find it so easy to understand. Look what the choose function does in Excel, guys. It simply says, where is your switch? So here's my switch. It says, where is your switch? And then all it wants to know is where are your cases? Where are the various cases? Now I only have 3. You could have 4, 5, 6 cases. Where's the switch? And where are the cases? In my example, I have 3. So it's really simple. Here's how it works. If you put a 1 in the switch, it pulls out the base case. If you put a 2 in the switch, it pulls out the best case. And if you put a 3 in the switch, it pulls out the worst case. But how does it know? What does the order depend on? It's very simple. If the switch has a 1 in it, the choose will pull out the next item in the list. In this case, cell G14. If there was a 2 in the switch, it pulls out the second one and then the third one. The order depends on the order that you type the cells into the formula. Very simple, but it's really clean, very elegant. And again, we just find clients love it because they understand it. The index and offset are very powerful tools, but they can get quite complex. A lot of users don't fully understand what they do, and they can sometimes be confusing. So for a simple example like this, you can use a simple choose function. And then finally, the last thing is this. I don't want to leave my variable exposed. I don't like having a number 1 like this in a cell. I don't want my client to come here and touch in a 1 or a 2 or a 3. It doesn't mean anything. Nobody understands exactly what this means, the switch. So what I like to do is cover it up with a control, a really powerful, elegant user control. So when the user comes here, they just click on base, best, or worst. It's very simple. It feels like a piece of software, and they don't have to worry about typing in a number. Okay, fine. But how do I build it? How do you make this little drop down? I'll show this to you very, very quickly. By the way, we have a bunch of slides in the presentation. In our presentation, we included a bunch of slides for you on modeling skills, and you've got some slides here on choose function is on page 23, and you've got a slide on the drop-down box on page 25. Sorry, all the instructions on building drop-down boxes live on page 25. Okay, so how do we do this? It's actually very simple. You need to go to the developer tab, but you might not have the developer tab. If you don't even have a developer tab in your Excel, you need to turn it on. And to do that, we go to File, and then we go File Options. Okay, File Options, and you need to go Customize the ribbon. So File Options, Customize the ribbon. Again, if this is quick, you can check out the video after it's recorded. And you need to put a check mark in here in the developer box. This it always comes off. When you first install Excel, this will be off. So you turn it on once, and then it will always be on. And once you have a developer tab, you can simply click on the developer tab and then go insert. And you want the form controls. Remember this, you want to go to the one that says form controls. And I'm looking for the second one that says combo box, just like that. And then you can hold your mouse button down and literally just draw yourself a combo box. It's very simple. You draw it. And once you draw it, you right click on it and you go format control. Okay. And from format control, it wants to know 2 things. It wants to know the input range. Now that's just the range of text. Where are the words that you want to live in the drop-down box? Whereas the cell link means where is the switch? Where is the actual switch? And that's it. You literally draw it, you right click on it, and you format it. And once it's working, you will have this really elegant little tool that controls. And all it does is, guys, when you click on base case, it enters the number 1 in this cell. When you enter best case, it enters the number 2. And when you click on worst case, it enters the number 3. That's it. Very simple, very elegant. All you now do is right click on it one more time and move it on top. And from there, your boss, your client, your colleagues will really enjoy playing with your model without having to feel like they are entering numbers. Okay. So a very simple little elegant tool to play with your scenarios. That gets us through the 5th takeaway. The last ones I'm going to do very quickly because they're really important, but I don't have to demonstrate many technical skills. Let me start with number 6. Number 6 says build the financial statements vertically. Now I've got a recommendation here. I'm going to show you the model again. Does everyone see here my income statement? I have my income statement. Underneath it is the cash flow. Underneath the cash flow is the balance sheet. And we find that you minimize errors when you build it vertically like this. Has anybody ever seen, guys, can you raise your hands? Has anybody ever seen a model where each financial statement was on its own separate tab. So for instance, you might have had an income statement tab, and then a balance sheet tab, and then a cash flow tab. Can I take a look and see any show of hands? Anyone have seen that way? Yeah. Now, let me be very clear. That's not wrong. It's not wrong to do that. There's nothing wrong with that. In fact, on our website, we also have a horizontal orientation because a lot of people around the world do like to build things on different sheets. But what I can tell you, and I promise you, is that we find a lot more errors in horizontal models than when you keep it vertical. When you keep your financial statements oriented vertically, it minimizes errors because it treats the whole thing like a waterfall. You guys know as well as I do that the financial statements talk to each other. Every income statement in the world starts with revenue and ends with net income. Well, every cash flow statement in the world starts with net income. Take a look. It just continues where the income statement left off. If you keep it aligned vertically in the same sheet, in the same column, it's so easy to get it working. And of course, if I want to add back my depreciation, again, I'm staying on the same sheet. It keeps it nice and clean, nice and vertical. Whenever you start bouncing back and forth between sheets, it inevitably increases errors. And guys, we see that on the exam. By the way, as I told you, the level 1 exam requires you to build a model just like this. And by the way, we don't care if you build horizontal or vertical, but we can tell you from, if you talk to all of our graders, they will tell you that the models that are built more horizontally occasionally have more errors, because when you're working really quickly and you have to jump back and forth between sheets, it's easier to link to the wrong cell and then things don't work. The cash flow statement always ends with ending cash. That's the last line on a cash flow statement. And it's the first line on most balance sheets. So it all just works its way down the page. So I encourage you to think about that. If you've never done that before, give it a try. I think you'll find it's very clean. It's very simple, and it makes it easy to audit and easy to build. Then the last couple tips here are pretty simple. I'm going to get through these quickly. 7 and 8 say, regardless, guys, regardless of if you build horizontal or vertical, this is true. Point 7 says, do not do any work on the financial statements. This is so critical. One of the most important tips I can share with you, I mean, they're all important. Do not build any giant formulas on your financial statements. What am I talking about, guys? Let's go to my income statement. If I go to my income statement, I do not want to see a big giant formula anywhere. Look what happens when I click on revenue. It's just a link. It's really nice too, because it's in the same column and on the same sheet. It's just a simple link and a little link. And then I have a tiny, tiny subtraction. That's not a big formula. That's simple. What about cost of sales? It's another link. All I have on my income statement are tiny links or little formulas, little subtractions, a link to another cell and a tiny calc. It's so easy to build when you are building little links. I never want to see a big, huge formula on any of my financial. Look at my cash flow, guys. A link, a link, a link, a link. I don't want to see any big formulas. And yet so often when we review models, we see giant formulas on the financial statements. So if you're not going to do any work on your financial statements, where are you doing the work? Well, very simply, you're going to build your work on schedules. Every single line item that requires a calculation should have that calculation come from a schedule. So in this example with revenue, I don't want to build up my revenue formula here. This is going to come from a revenue schedule above. Let's go to it, K26. As I slowly roll up my page, look what I'm linking to. I'm linking to the bottom of a revenue schedule. So this leads me to two of my favorite sayings about financial models. Two of my favorite modeling sayings I'm going to share with you. Number one says, build it, then link it. Build it and then link it. What that means is build a schedule, then link it into the financial statements, build a schedule, and then link it into your financial statements. I never want to see big formulas. Guys, so often people email us their models because they're not working. They're not balanced. They can't get them working. And we will look at the financial statements and we often see big, huge formulas. And we know there's a mistake somewhere. We'll help them find it, but it's really hard to work with a model when you are building formulas on your statements. So we build a schedule, link it in. So I build a revenue schedule and then link it in. Then we build a cost schedule to build up the operating costs. Really simple. And then look, we get to our total costs at the very bottom of the page, total costs on the income statement. Again, it's just a link all the way down. If you need depreciation, that's going to come from a depreciation schedule. Same with interest and same with taxes, all the way down. Such a simple idea, and yet so often people don't do this, and then they get themselves into all sorts of trouble. So the last 2 points, last 2 key takeaways say, build really, really simple formulas. And I'm going to show you how to do that. How do we build really simple formulas in our models? I never want to see a big giant formula anywhere. Take a look, guys. Let me go to my revenue schedule for a second. I'm going to build something silly. Can you guys take a look at my screen? Has anyone ever clicked on a cell in a spreadsheet and seen something like this? I'm going to make up a silly formula. It's going to make no sense, but I'm going to build a really silly calculation. I'm going to go to one sheet and grab a number here. Who cares? I'm just going to grab a number on one sheet and I'm going to divide by a number on a different sheet here. And then I'm going to multiply by a number on a third sheet here. Who cares? And then I'm going to subtract a number from a sheet here. Has anybody ever, look at my formula, guys. Can you raise your hands? Has anybody ever seen a formula like that, that's linking to cells on lots of different sheets like that? Has anyone ever seen a calculation? Some very seasoned, experienced people who will tell me that they are excellent modelers will often do this. We all get tempted to do this. You've all seen this, right? This is not ideal. This is not optimal. I never want to see this. You're going to make your boss's life miserable, your client's life miserable if you do this, and it's very easy to make a mistake. So what did I say? Build really, really simple formulas. Very simple. How do you build simple formulas? Well, we repeat our data. So let's take a look. Watch this. If I want to build up this company's revenue, well, revenue is a function of prices and volume. So let's pretend this is an oil and gas company. Okay, I'm going to make this up. It's an oil and gas company. I've got a section to forecast the price of oil. And then I've got a section to forecast the volume of barrels. And then the total revenue is going to be easy. Watch, my total revenue is just going to be price times volume. Look how simple that is. Price times volume. Very, very easy. Okay, no big deal. But the point is, I'm breaking everything out step by step. And if I need to build up my pricing section, look what I did. This company has a gross selling price, just like oil and gas companies. There would be a gross selling price. That's coming from a different sheet. I repeated it. And then they have to deduct some sort of a freight charge or a warehousing charge. This is a charge that grows at inflation. So look what I did. I repeated the gross selling price. I repeated the inflation. And then my formula for freight and warehousing looks like this. Look how simple my formula is because I repeated the inflation. And look how simple my net price is because I repeated the gross and I've got the freight right here. Guys, when you look at this model, when you get sent it, you will see every single formula is just a link, or a tiny calculation, Look, a link or a tiny calculation all the way down. And you know what that does? It creates tremendous confidence because people can read it. They can follow it along electronically or on paper. I never want to see a formula like this because I can't read it. I don't understand it. You know what we do? What I do? If I ever see a formula like this, it's a bit of, and I don't understand it, what we will do is I will follow this discipline and I will simply repeat all the cells. Look at what I'm going to do to make this much simpler. Okay. Look at what I'm going to do to make this much, much simpler. I'm going to take the first cell, copy it, and I'm going to put it in its own cell right here. And then I'll label it. Okay. I will label it, whatever the heck this thing is. I don't know. I'm making this up. So I will repeat it and label it. And then I will take the second cell. Oops. I will take the second cell that was in my formula here. I will copy this one and I will repeat this one. And then I will take the third one here, whatever this one was, and I will do the exact same thing. Now, each of these will be labeled, and then I'll have a calculation. But now, instead of building something that looks as crazy as this, I will build it much more elegantly. Let's see if I get the same answer. I'm going to take, I think I said, take this number, divided by this one, multiply by this one, and then subtract that one. Did I do it right? I did. Now take a look. Look how much easier it is to read and understand and follow the logic here. It's elegant, it's logical. And if you ever see formulas in our models, this is the discipline we're looking for of a model builder. Your client, your boss is going to so much appreciate this if you design and organize your models this way. You don't have to pay, you don't rent lines by the row, so you may as well add them. It will make your life and everyone else's so much simpler. That gets me to my favorite saying before I wrap up the webinar here. I told you that one of my favorite sayings is build it, then link it. The second one says repeat and link. What that means is repeat every assumption, then use in calculations. That way, it's clear and everyone understands exactly how you built every calculation. So guys, it's not rocket science. Building a model does not need to be rocket science. And yet, as I told you, so many models that we encounter are a mess. More often than not, people tell us we see models and they're a mess. People call us all the time from every walk of life, from every industry, and they say, can you help us? Our models are a disaster. And I promise you, whenever we see models are a mess, I promise you the model builder has violated at least one of these rules and these ideas. They either didn't plan it, they didn't have the assumptions. You get the idea. Something or many of these have been violated. So my promise to you is if you can think about these takeaways and you can do your best to incorporate these ideas, I promise you that you're going to have a model that's clean, that's organized, that tells a story, and that creates tremendous confidence because it works electronically and on paper, and it will elevate your skills and the quality of your models. So that's exactly where I wanted to get to on time here. I want to thank you guys for being here. We do have 10 minutes for questions. So I'm going to ask Julian to come back now. Guys, I hope you came away with a few new tips and ideas. Again, when you get my notes file, here's my email again. You're welcome to send questions if you have any. Always happy to be in touch with people. But Julian, do we have any questions that people wanted to discuss?
Yes, we do. We have a few that have come in. So the first one is, what is the best method to build a direct cash flow statement versus the example in the presentation being indirect? And is it more difficult?
It's not more difficult. I'll be honest. I mean, it's we don't see it as often. We don't see it as often. I mean, typically, and we look at financial statements of public companies from all over the world, and of course, the indirect, an indirect cash flow statement is much more typical for public companies around the world anyway, and that would follow. But honestly, it's not. I have gosh, I can't remember the last time I built a model with with a direct cash flow statement, but it's not different. I mean, I'm just trying to remember the sequence. Obviously, we're trying to capture all the inflows and outflows directly. I would either, I mean, I'd love to see, you know, if whoever asked the question, if you want to sort of email me a snapshot of the historicals of the company you're looking at, can give you my thoughts more specifically. But in a nutshell, I would take every line item and do exactly the same thing. Build a schedule for that line item. So whether it's revenues or costs or whatever the line item it is, have your schedule and link it. It doesn't need to change anything. It really, truly does not need to change anything. Every single line on the financial statement. So what I always do, by the way, what I always do when we have to build a model is start by entering the historical financial statements exactly as the company reports them. So if you have a company with a direct cash flow statement, I would enter how many years of historicals, exactly the line items that you need. That's it. And then I would figure out which schedule. I still don't want to do any work on those line items. I would figure out exactly what schedules I need to flow into those statements. It does not change the idea that you still want to build it and then link it. I don't want to do the work there. So whatever the lines are, I will build a schedule and then have those link in. Okay. And some of them will be similar, things like capital expenditures and financing activities, right? I mean, whatever the lines are good. Like my financing activities come from my debt schedule below, from my equity schedule below. But if you're linking directly to a revenue or cost schedule, that's fine too. So again, it'd be helpful if I could see it, but the discipline, I promise you, is exactly the same. Okay.
Awesome. Our next question comes from Larissa. By repeating the data or inputs on the sheet, does that improve the efficiency of the Excel processing power, or should we link to different sheets when creating a formula? Can you read the question? I want to make sure I hear it. Can you, I will read it at the beginning part again. Absolutely. By repeating the data or inputs on the sheet, does that improve the efficiency of Excel's processing power? Yeah. So here's the simple, it's a very technical question. Here's the simple answer is that you're correct that different functions, and people measure this. It's measured like in microseconds. I will tell you that for 99% of models that you're going to build, which are going to be anywhere from much less than 1 megabyte to a few megabytes, even models like this model is tiny. This model is, I don't know exactly, less than 1 megabyte for sure, probably less than half a megabyte. Even big models that we will see tend to be 2, 3, 4, 5 megabytes. And in my experience, even at that size, you won't notice a difference if you repeat the assumption, or if you built a formula that linked back to it. The rationale for repeating the cells has really nothing to do with, the rationale repeating really has nothing to do with the speed of the spreadsheet. It has to do with the clarity and the communication. And I am not, I've read articles about this. I'm not an expert in Excel architecture or the speed, processing speed. I know certain functions take longer to process than other functions. But even when you read the articles about this, you need thousands of versions of a function. I think an offset function takes, a nanosecond more than some other functions, but you'll only notice it if you've got hundreds or thousands. I don't think, in all the models I've encountered that you're going to have an issue. And by the way, last comment on speed. Whenever people have an issue with a model being too slow, we have a whole list. I think it's actually one of our later webinar topics is model bloat. Yeah. Topic 5 is model bloat. Reasons why models become large and slow. I can tell you, I have never seen a model become large and slow because of links to different sheets. There's a whole list of reasons why models do become large and slow. All sorts of inefficiencies, functions, other garbage in the files. I've just never seen this become an issue. I mean, if you have an example, you're welcome to send it our way, but this to me has never been an issue. So. Awesome. Our next question is, are there companies currently requiring FMI certifications despite it being relatively new? And if there are, can you provide a few? So I'm not aware. I am not aware of any companies that require it yet. We're seeing more and more companies are, adding it on. Some companies we're seeing are adding it. Like if they're looking for someone with modeling skills, in the old days, they would have said, we're looking for people with good modeling skills. Now some companies are saying, we're looking for people with good modeling skills, including perhaps having one of the accreditation levels from the FMI. I think you're going to see more of that over time. For recruiters,
it will just be an easy way for them to tick a box. Because if they see that someone has level 1, the AFM level 1 of the FMI, it guarantees to the person hiring you that you know how to build a 3-statement model like this from scratch with no internet access, no resources. So they don't even have to ask you about your modeling skills. They guaranteed know that you have strong skills to build this because you did it in a controlled environment. I think you'll be seeing it more and more over time. I can tell you, as I mentioned earlier, PwC has been using the exams internally to test their own people and make sure that their own people around the world have really strong modeling proficiency. Everyone on certain teams at PwC is required to do level 1. And then some people, if they're interested, are encouraged to do level 2. But yeah, I think you'll see more of it. It's really true. It's the only true rigorous, accreditation where you actually have to build a model that's not attached to training firms, right? We're not here to provide the training. It's the same way. And by the way, last comment is, believe it or not, there are not many firms that require that legally require CFA either, a CFA designation. I mean, I have my CFA designation. A lot of job postings will say, we're looking for an accountant or a CFA. And if they choose to make it mandatory, that's their own decision. But there's no there's no regulatory requirement that forces people to have a CFA. But a lot of organizations or certain industries will self-impose that. And we're hoping that becomes the case for the FMI as well. Okay. But it's a great question. Thank you for that one. Any other questions, Julian?
Yep. So our next question comes from Grant. They ask, are there any formulas that you think are often commonly misused in financial models and should be avoided?
Are there any formulas?
Yeah. Are there any formulas you think are often misused in financial models and should be avoided?
So I assume that the person who asked it is, if I misinterpreted your question, please let me know. I assume you meant functions in Excel, right? The functions are, of course, these here, the various lookup functions, and these are, I assume that's what the person meant. So we've got all the lookup functions here. We've got all of the financial functions here, misused. Well, what I would say is that some functions are much less commonly known, much less commonly understood than others. Our recommendation is to try to use a simpler version of a function because it will be more transparent, more usable. As an example, if I look in the lookup and reference functions, the indirect function, it's a great tool. I love the indirect. Has anyone here, has anyone here ever used Excel's indirect function before? I'm gonna see if a few hands go up. Okay, great. It's a few hands have gone up. There's always a few people that use it. I would encourage you to use it sparingly because, and it might be hard to hear that. And I only say that because the vast majority of Excel users will not be fully familiar with what it's doing. And by the way, when people use the indirect function, they're often using it in conjunction with an address function and a row and a rows function to create, complex ways of sort of bouncing, of creating different aggregations. And so if you need it, if you absolutely need it, use it. But sometimes we find that people who love Excel functionality will use more complex functions than they need. As an example, I showed you the choose function. I like it because of how simple it is. I mean, you could use an index or an offset, but most people don't know. So as an example, I'll show you here. How many of you have used Excel's index function before? Can you raise your hand if you've used the index? We'll just go a couple more minutes. I bet you a lot of you have used. Okay, good. Perfect. Good. Now, did you know this? Did you know this, by the way? For example, if I show you offset function, look, there's one mode of help. If I show you Excel's choose function, there's only one way to use it. The index function is the only function in Excel that has two versions. The two versions is what's called the array form and the reference form. And by the way, the help is wrong. So don't go to the help to learn. Be honest. How many of you, because usually, how many of you, if your boss or your client called you up right now and put you on the spot and said, quick, what's the difference between the array form and the reference form of an index function? How many of you could rattle it off and answer that to your boss on the spot confidently. Because again, the help function in Excel is wrong. It's not right. How many of you know, just a couple, much less people raise their hands, only about 2 people raise their hands. And that's what I find. So things like an index function are great, but they can get complex and not everyone understands how they work, and they can confuse clients that don't always have the strongest Excel skills. So I ask you to use your judgment and try to find a tool that works and is effective, but is also transferable and transparent. And it's always a balancing act, but that's our recommendation. Okay. By the way, when you build models, if anyone wants to do the exam, we would never penalize you for using complex lookup functions. We encourage and like people to use functions that are clean and transparent. We always look for flow and simplicity. But if you want to use stuff that's more complex, we don't have a problem with that. We would have time for another one, maybe one more here, and then we'll drop off, guys. I know many of you are still around, but thank you for sticking. Let's do one more, and then we'll wrap it up here.
Awesome. So for Michael, they ask, what do I do if key inputs or assumptions come from a schedule built by a technical expert, and then there are several iterations over the coming weeks and months? How do I avoid rebuilding the model in each iteration, especially if the schedule changes its structure?
Well, it's a great question. I mean, it's a question that I'd love to kind of look at with you. And if you want to set up a time to speak and discuss it, I'm always happy to give people thoughts. What I would encourage then is, if you need a bit of a schedule that's almost a bit of an engine, and I get that. We see that all the time with resource businesses or companies that have a certain technical engine that's, I would almost, if someone else if I'm not building it, if someone else has to build a very technical part of the engine, and by the way, I refer to kind of the model sheet as the engine, then I would encourage them to build up the engine the way they want, with drive themselves down to one key output. So for example, I'm just going to make something up. I might have one more tab here. I might add one more tab that's called, technical engine. And I might let someone else build that. But at the end of the day, I want, if I'm the user, if I'm the model owner, I want my technical engine to drive down to 1 or 2 or 3 critical outputs. So for example here, let's pretend this was the technical engine. It had lots and lots of rows. I might suggest that I might work with the technical person and say, okay, there's 6 rows at the bottom here, and this is where the key outputs are going to live. You build your engine the way you want, and I'm going to have 6 outputs that are the key components coming out of this engine. And then my model sheet, whatever those rows are, will link to the very bottom. And then if the person building the technical engine feels the need to rebuild it or update it, they can send me a new sheet, and I can just replace the old one and quickly update my only 3 or 4 or 5 links. If I'm building it myself, then I'm going to take guidance from the technical person. I mean, usually I prefer to do it myself and build it the way I want. And again, to get to a few key output spots and link them into wherever I need to in the statements. And again, if that doesn't quite answer your question, again, happy to chat about it offline. I do know and understand that some models have a pretty technical piece to calculate something. And, but I would try to make sure that you're not linking to it hundreds of places. I would link to that technical module only as little as possible, so that if it gets redesigned, it's not a big deal to replace it. Okay, and that's my recommendation on that. Great question. I love the ideas and thinking. And in that technical module, I would still do the same thing. I would design it row by row so it's clear and labeled, and every little piece builds up separately so that it's understandable. Okay. Yeah, really like that, guys. Great questions. I hope that you took away a few tips and skills and ideas. Obviously a lot of you have got some great modeling skills and you've done some modeling, which is awesome. But I promise you that when we work with pretty experienced modelers, and they don't need us to teach them accounting or finance or even Excel functionality, but where people often get into trouble and can improve is the communication aspect. How do you build it so it's clean, clear, helpful, and truly inspires all of your clients, your bosses, and your readers. If you can do that, then you're really, truly are going to be best in class. So you're going to get all these files sent to you. Definitely thank you for your time. We'll hope to see you again for one of the other webinars on checking and reviewing and some of these other tools. Again, but good luck with your modeling. Kylie, I don't know if you're still around, but we can toss it back to you. I want to thank you and the rest of the CFA Society for having us in to run the webinar today. And again, guys, I appreciate you being here and encourage you to be in touch. And when this crazy pandemic ends, I hope to we can get out there in person and see some of you live. Okay. So thank you all. I'm not sure if Kylie is here, so I guess we'll just end the webinar. Oh, are you there, Kylie?
I am here. Thank you so much, Ian. Really appreciate it. And Julian too. Okay, excellent. Thank you, guys. Thanks, Kylie. Thank all of you. Have a great day and be well. And we look forward to seeing you all again. Take care. Bye. Thank you, guys. Thanks.